다섯 번째 발표를 시작하겠습니다. 다섯 번째 발표는요, U.S. institutions are already on chain이라는 주제로 오르카의 치프 리걸 오피서 크리스토퍼 몬타가노께서 진행해 주시겠습니다. 여러분 큰 박수로 환영해 주시기 바랍니다.
Hi there. I want to begin by thanking NextBlock and eToday for hosting us today, and Vice Chairman Lee, in particular, for his gracious welcome this morning, and would be remiss in not thanking Daniel Kim and the Tiger team for helping really bring us out here, and thus far have shown us a very warm welcome to Korea. So thank you, Daniel. So I'm Chris Montagano. I'm Chief Legal Officer at Orca. Before we get started, I wanted to introduce you to my background a bit. So I began my legal career at the Securities and Exchange Commission, the SEC, in the United States, before moving into private practice, where I worked at one of the largest corporate law firms in America. And at Sidley Austin, I did mergers, acquisitions, public equity and debt offerings, and then moved in-house with a large asset issuer in the United States as their in-house corporate counsel, where I led their IPO among a number of other significant transactions. And after our IPO, I was taking a brief break from my career and started dabbling in DeFi products. Uniswap, perhaps you've heard of. Aave is a large lending protocol. These are some of the first on-chain applications ever built. And that's when I met the founding team at Orca. And what we put together was one of the first applications built on the Solana blockchain. And we actually received a grant from Solana Foundation, very early days. In all, we built an automated market maker, or AMM, to start, and we were one of the first AMMs to hit the market. We were one of the first crypto companies that was building the space that was exclusively focused on DeFi back in 2020. And so after we launched our AMM, we raised approximately $21 million from some of the top venture firms in the United States, including Coinbase Ventures and Placeholder, as well as Polychain. And very quickly, we grew into one of the top DEXs on Solana. We hit over $2 billion in single-day trade volume last year. In cumulative volume throughout our 5-year operating history, we've processed over $500 billion in transactions. And I'm proud to report that throughout that entire history, we've done so without zero security instances. So there has not been any protocol exploits that perhaps you've heard of in the DeFi landscape as a whole. I credit that to our very diligent engineering team that continually, anytime there are any alterations to our smart contract code, we have that audited. So our code's been audited 8 different times by independent security firms. And so, throughout our kind of journey the last 5 or 6 years, our focus has always been our original vision, which was that access to sophisticated financial products that have consistently yielded quite high risk-adjusted returns have been limited to the few American elite, really, as an investor class. And we wanted to democratize access to these sorts of risk-adjusted, high-returning assets. And that's why we built Orca. We think blockchain is by nature an environment that fosters open innovation as well as open access. And however, we wanted to do that in an environment that was aligned with our values as entrepreneurs and traditional capital markets participants, which included complying with anti-money laundering or AMLs and sanction laws in the United States. So back in 2022, we were one of the first, if not the first, DeFi protocol to integrate what's called blockchain analytics technology. And so blockchain analytics allows you to screen DeFi wallets before they're connected to your protocol and mitigate any sort of risk that those wallets are held by illicit actors. So in addition to utilizing blockchain analytics, we also implement something called geofencing of our front end or website from any jurisdictions that are included on OFAC or FATF sanctions list, which is reflective of compliance always being at the heart of our business. So it's never been an afterthought for us. It's quite literally baked into the technology itself that the tech cannot be used by illicit actors. And so we've been on this policy journey for some time. We began in depth about a year ago, and that journey began in the first instance with engaging with U.S. lawmakers in Washington, D.C. So we began meeting in person with different congressional leaders as well as their staff. That transitioned to the White House asking me to come in and walk them through our technology in DeFi, in particular how we've been able to reach a high degree of success from a user perspective on distribution of assets while maintaining true to our compliance roots. And so we, about 12 months ago, the Solana Policy Institute, you heard from this morning, the keynote speaker, Miller Whitehouse Levine, he approached me and asked me if we would help co-lead an endeavor we coined Project Open, which would be a proposal to the Securities and Exchange Commission to permit publicly traded securities in the United States. We call them national market securities or NMS securities. And so Miller asked me to be the quote-unquote face of DeFi for this endeavor. And while I spent time at the SEC, I also, at that point, had spent quite a bit of time as the chief legal officer of a DeFi protocol as well. And I'm not sure if you're aware, but in the United States, the SEC took quite an aggressive view toward prosecuting early DeFi developers in the United States. Most notably, Uniswap was a project that was subject to a number of different investigations, and at that stage in our life cycle, right, we're still a young startup, and while we have resources, having resources to deal with those sort of investigations is a frankly different endeavor. And so I was quite nervous about being the quote-unquote face of DeFi, but we believed that in order to reach our ultimate vision of our technology, which is institutional grade assets transacting on Orca, we would need to lean in and get recognition from the SEC about how our technology ought to be regulated. And so I went ahead and did that. And our first meeting, very ironically, was on my birthday last year. It was June 12th, celebrated my 40th birthday at the SEC. Is not something that I was particularly keen to do, but nevertheless, we had a terrific first meeting with them. They were very constructive, very inquisitive about our technology, how it operates, and in particular the non-custodial nature of the technology itself. Over the subsequent 12 months that followed that initial meeting, we met with the commission more than a dozen different times, including commissioners. We did a project demonstration with Chairman Paul Atkins in his office at the SEC, and Chairman Atkins himself is quite passionate that innovative teams like Orca technology, like the automated market maker that we built, ought to be something utilized by capital markets more broadly, and certainly innovation in our space should not be deterred by regulation. Instead, regulation ought to set a framework where technology firms like us can flourish and innovate in the space. And so you may have heard, to the extent that you follow U.S. regulation closely, Chairman Atkins has in many recent speeches referenced something called the quote-unquote innovation exemption. The innovation exemption is our framework. So it is a reflection of Project Open. They have issued something called staff guidance, which is, I would say, about 30% of the way toward our ultimate goal. And all indications are the innovation exemption is here to follow shortly. It's been delayed a bit pending the negotiations regarding the Clarity Act. The Clarity Act as well, as Miller noted this morning, includes specific recognition that DeFi trading protocols like Orca ought to be treated differently than traditional financial institutions, notably because we do not take custody of user funds at all in the way the technology flows. So now that I've kind of walked you through a bit about our framework, what I'd like to do, instead of, I think we've heard quite a bit today about what is possible with DeFi technology or blockchain technology more broadly. I think the gentleman from Mary Securities, did a nice overview of, what's possible in the future. So what I want to do today, instead of talking about what's possible, is actually talk about what's happening. So there are a number of products already live in the space that I would call tokenized RWAs. I think you heard earlier from the Tiger Research team, a nice overview of many of these assets as well. And these are three assets that have launched on Orca in just the last 3 weeks. So GLDY is an asset that was issued by a publicly traded company in the U.S. listed on NASDAQ, and then SPCX is a token that was issued by a Japanese regulated exchange, and Prime is a tokenized RWA that represents yield of an institutional grade private credit product. And so I'm going to walk you through in detail a bit about each of these, what I call use cases that are very recent and very live on Orca today. So the first here, GLDY, as I said earlier, the issuer is a company called StreamX. StreamX is a NASDAQ-listed public company. And why I think it's noteworthy that these issuers are publicly traded in the U.S. is publicly traded companies, of course, are SEC registrants. They have very deep compliance departments. They take issuing an asset quite seriously. It impacts their core business as well as their future business, right? So StreamX issued GLDY. GLDY, when you mint it, you hold an equal ownership to what you invested in gold, and they work with a party that leases out that gold, and so there's yield that is generated on your asset as well. And the yield component, from a legal perspective, makes this asset a security in the U.S. And so the fact that it's a security and it's regulated by the SEC means we had to come up with a unique solution in order for it to trade on our permissionless rails. It couldn't just let loose like any crypto native asset. And the issuer, StreamX, opted for, at the start, GLDY to be issued under what's called Regulation D in the United States. Reg D is an exemption from public registration that requires the issuer to ensure holders are accredited investors. Accredited investors have to meet certain income or net worth thresholds in order to hold and transact in that asset. And so what that meant for us is we had to come up with a mechanism that would ensure GLDY did not get in the hands of someone who was not an accredited investor. And so what we built out to accomplish that was quite novel. It was the first of its kind technology in our space, and it permits the issuer to actually control, from a technical perspective, the KYC process themselves. So when you go to buy GLDY on Orca, you will get kicked over to StreamX's KYC and accreditation process. Once you submit your information, they verify that you're an accredited investor. You are returned to Orca's back-end infrastructure, which is consistently pulling data from StreamX in order to confirm that each wallet who's trying to interact with GLDY has been whitelisted or deemed eligible by the issuer itself. And then that back-end infrastructure communicates with information on the blockchain to, again, trigger the thaw or the permission element that would then permit transacting in GLDY. Once those steps are taken, boom, you can buy your GLDY, you can sell it, you can provide liquidity, you can do all of these things on a 24/7 basis, utilizing the programmatic, state-of-the-art technology that lives on chain. So this is an example of an environment that permits an issuer to maintain the compliance needs that it has while also facilitating transacting in that asset globally 24/7 using the same rails that people have enjoyed for the last 5 years on Orca. And for those of you who are engineers in the room, not sure if there's many, I also recognize it's the afternoon and everyone's quite tired. But here's the actual breakdown from a technical perspective of how our technology flows. So again, you have the KYC or whitelisting process at the top here, which is managed by the issuer itself. That communicates real-time with Orca's back-end infrastructure, which is also communicating real-time with Solana blockchain architecture. And that is feeding, once the approvals are cleared, it kicks you to Orca's on-chain infrastructure. Our smart contracts on-chain comprise really the latest and greatest in what I would say like speed maximizing, efficiency optimization, trading technology. So we have a concentrated liquidity automated market maker. We have an immutable version of that, as well as a proprietary AMM. And so once you've been KYC cleared, you try to initiate your transaction. Our aggregator will programmatically determine which path is most efficient for your transaction, execute on that real time, and your trade will be settled on the Solana blockchain. So this is an example. I think we've heard multiple times today nuances between public blockchains, private blockchains, and some of the limitations that the public blockchains in particular may present. We believe this is a extremely novel solution to that quote-unquote issue that Solana as a public blockchain faces, that is not as restrictive as a general private chain like Canton. So this is a way to implement the same privacy and KYC dynamics that institutions require, that regulatory bodies require, while doing it on a public blockchain. The next case study here is SPCX. SPCX is what I refer to as an economic exposure token. So SPCX was issued by two companies in collaboration. One is Backpack, which, as I said earlier, it's a regulated and licensed exchange in Japan, as well as Sunrise or Wormhole, which is a former jump trading company that's extremely active in the United States. And so what Backpack did is it acquired SpaceX shares at IPO. And so this just recently happened, right, last week. 6 days ago on June 12th, largest IPO in history. Generally, these sorts of events are restricted access-wise, right, to those who have accounts at large brokerage houses in the first instance, and then second, American citizens and others before ultimate distribution flows offshore. Well, what was novel here is literally out of the gate, Backpack had access pre-IPO to SpaceX stock. It created a technology environment where each token of SPCX that was minted represents on a one-to-one basis shares of SpaceX stock. And it worked with Wormhole, Sunrise to tokenize that so that you could trade SPCX live at IPO anywhere in the world, 24/7, as opposed to generally an event like that being limited to those with access in America to their accounts. And so SPCX as an economic exposure token is available permissionlessly to anyone, tradable 24/7 on Orca. The last case study I'm going to walk through is an interesting one. I think the figure guys had to step out for a meeting, but Figure is a significant player in the private credit market in the United States. They're a NASDAQ-listed company as well. They were founded by a rather notorious, in a positive way, entrepreneur named Mike Cagney, who founded a company called SoFi. SoFi, of course, one of the largest credit providers throughout the United States. He subsequently sold SoFi and formed Figure. And so Figure is quickly become one of the largest issuers of home equity line credit in the United States, which is a massive market. They have issued now in a very short amount of time, a matter of 2 years, I believe, over $25 billion of home equity line credit on chain, all of it on chain. And up until about 6 months ago, when they launched the Prime token, yield from the home equity line credit that they were issuing, which is secured notably by people's homes. So this is very high quality debt, only to high quality credit worthy borrowers, was limited to really 3 institutions in the U.S. that have access to this, what we call HELOC, home equity line credit assets. And it's like Goldman Sachs, JP Morgan, right? Literally 3 of the largest banks in the world. That's it. No one else had access to this sort of yield product until Figure tokenized that yield in the form of Prime. And Prime is a token that, as I said, represents the yield derived from the private credit issued by Figure, a NASDAQ-listed company. And about 2 weeks ago, Prime began providing liquidity on Orca. It trades freely on the Solana blockchain, permissionlessly, among investors who choose to partake. And so another example of an institutional grade RWA product that is available on Orca real time today. So why I wanted to walk you through that is because we spend a lot of time talking about what feels somewhat amorphous at times with blockchain technology, of some promise of tomorrow, promise of future technology, how we're going to hit these trillion-dollar cliffs on some day in the future, and I think it's actually quite notable that there are a number of companies leaning in that are not, kind of early stage startups that are pushing boundaries, but rather you have institutional actors, whether that be BlackRock, Franklin Templeton, Fidelity, that you've heard issuing, money market fund products, but also NASDAQ-listed companies using, a bit more novel avenues or models to make available on-chain private credit, public equity, equivalent assets, as well as fully permissioned regulated assets on public blockchains today in a manner that's consistent with guidance from US regulators and US policymakers. So our vision for the future is not a, what I would say, kind of cobbled together scenario where when you want to trade a particular asset, you have to go to open up an account at XYZ Bank, or go to another user interface, or go to this other blockchain, or take these other steps. Instead, what we envision is a single venue that's public, open access for investors to choose what types of assets they want to transact in, whether that be private credit, whether that be a public equity economic exposure token, or a regulated asset. You can go to one place and execute that trade. And we think from a technological perspective, these are a handful of models, but that possibility is really limitless, and you don't need to have a walled environment to accomplish your privacy needs. You just don't, from a technological perspective, despite what some folks may posit. That can be accomplished at the application layer. It can be accomplished at the token layer, and so that's why we've chosen to lean into a public blockchain model with a DeFi application built on top. So why am I here? Largely because Daniel asked me to come, but and share our kind of learnings from spending half a decade in the U.S. working with policymakers and regulators and building technology in the space. But also, we're quite keen to learn more about your market, and I think hearing the remarks this morning from Assemblyman Min, and we're going to be speaking on Monday to the National Assembly, sharing some of our learnings, and I want to also learn from those on your digital asset committee about how they're thinking of shaping the future here in Korea. Very keen for those endeavors. Also interested to learn more from institutions such as Marriott Securities on how they are thinking about bringing regulated products on-chain, how they're thinking about structuring these products in an efficient manner to make them distributable globally, and also, in particular, my colleague Mike, who is here in Seoul, is quite keen to see if there's an avenue of us to bring more distinctively Korean products outside of Korea, right? Help distributing these products to American audiences, whether it's K-culture, IP royalties, these sorts of dynamics, we think would be quite interesting too, and so to the extent you want to have these conversations, would love to have them. So I'm going to close with where I began. From our perspective, it's not the future. This is already here. We've have just in the last 3 weeks, right? 3 examples of institutional grade products launched by NASDAQ-listed companies that are all open and available on permissionless trading technology on Orca. Thank you.
네, 인사이트 가득한 발표 감사드립니다. Thank you for your insightful presentation. 네, 온체인 기술에 대한 장점과 잠재성 그리고 구체적인 유스 케이스에 대해서 설명해 주셨습니다. Thank you for explaining the benefits of on-chain technology and potential and also specific use case as well. 네, 질의응답 한번 진행해 보도록 할 텐데 혹시 질문 있으신 분들 있으실까요? 네, 그럼요. 그러면은 저희 질문 하나 진행하도록 하겠습니다. So we have a question from audience.
네, 먼저 발표해 주셔서 감사합니다. 저는 이투데이피엔씨에 소속된 서지희 기자라고 합니다.
잠시만 기다려 주세요.
Yeah. Sorry, can you?
질문 드리고 싶은 부분은 토큰 제도를 이제 만들어가는 과정에서 미국 시장은 세계 경제를 선도하는 선도국입니다. 반면에 한국은 대외 경제의 변수에 많이 취약할 수 있는 신흥국 경제에 속하기도 합니다. 그런 경제 규모와 이제 그 위치가 다른 상황에서 한국의 그 토큰 제도를 만들어가는 과정에서 미국과는 다르게 조금 더 고려해야 할 부분이 정책 당국과 시장 참가자들이 조금 더 고민해야 될 부분이 있다면은 조언 부탁드리겠습니다. 감사합니다.
Sure. So let me repeat the question to ensure I understand it. So you noted that my perspective is shaped from my experience in the United States, which of course is quite a large economy and has been leading tokenization efforts, and not your words, mine, but perhaps technology companies pushing boundaries. And here in Korea, more of an emerging economy. Do I have any kind of recommendations for operators or regulators thinking through from a policy perspective how to kind of navigate the landscape given your relative size positioning from an economic perspective? Is that right? Yeah. Sure. So I and want to start out by recognizing that this is just my perspective as an American market participant and attorney. I do not, at all have any expertise in Korean law or your market more broadly. So defer to maybe this is a better question for others in the room as well, to a certain degree, and so I want to caveat respectfully with that. From my point of view, I think that the Korean market is quite an interesting one, because while it is an emerging economy from a macro perspective, I would argue in our crypto markets, Korea is a leading economy, and I don't say leading from the perspective necessarily of from institutional adoption or from a policy perspective, but I think from a retail demand and interest point of view, there's quite a bit of organic activity here, which as an early operator and builder in the space, I think is really, really cool and very interesting. Because in the U.S. we kind of have an opposite dynamic, right? Where you have early days of BTC, Bitcoin, and some of the DeFi products that launched. You kind of had Silicon Valley elites, right? Andreessen Horowitz. Some of these firms kind of telling America the future is blockchain technology. And then you had lawmakers in Washington, D.C. telling America the future is blockchain technology. But many Americans are not super interested in playing around with and utilizing the technology. And it was more of like a top-down, your elites telling you that you should try this out, and now people are, starting to, many decades later, or well, not many, right? 15 years later, and here it's like the opposite dynamic. It seems, from my outside perspective, where you have retail investors participating heavily in the crypto markets, utilizing the technology themselves, very interested in trying it out, very interested in learning more about it. And that activity is actually what has motivated institutions to begin to think about ways of leaning into the space, as well as policymakers on leaning into how they should regulate the space. And so while you are an emerging macroeconomy country, I actually think you're quite a pioneer, if you will, in blockchain technology from a user perspective. And so my suggestion would be to any regulators here or kind of industry leaders is like you ought to listen to your citizens who are very active users of the product and take their perspectives into account. Because I think it's quite unique in that regard. And then from a more kind of granular experience perspective, I think our Securities and Exchange Commission in the U.S. has done a phenomenal job at encouraging industry participants to come in and talk to them. Done a complete 180 of the prior administration in that respect, and so you had one of our leading commissioners named Hester Peirce, who in particular she actually toured the country, meeting with different blockchain technology entrepreneurs, holding town halls. You could submit questions anonymously if you were worried about prosecution or whatever because of the prior administration, and genuinely trying to learn from us about what was happening in the space from a technology perspective and a user perspective. So instead of hiding from it and prosecuting it, they kind of encourage people to come in. And so my hope is, your regulators find an avenue of kind of following suit there to the extent they're able to.
Thank you for your answer.
Yeah.
So we want to hear more, but due to the time constraints, we need to wrap up the Q&A session. Thank you for your answer and thank you for your question. 네, 다시 한번 큰 박수 보내주시기 바랍니다.